And good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott Wave update for the S&P 500 for Sunday, August 29th, 2021. The S&P basically has opened up and is trading right around those levels that we saw on Friday. To just do a quick review, we did get a little bit of a reaction from the Fed announcements that came out from the press conference after the Jackson Hole, Wyoming Fed meetings with bankers and investors and all the higher ups there. But it wasn't actually so enthusiastic that it kind of made me stand back and go, wow, nor was it as disappointing that would have made me stand back and go, wow. So the reaction was there, so I can't walk away saying that it was a huge void of disappointment, because it actually wasn't. It was tradable. It did produce some nice trading and the ability to make some solid profits. Now, what does it do for our Elliott wave count? Not a whole lot. So let's just kind of take a quick review that we are continuing, or I am continuing to count a minute C wave, which will complete a minor B wave and set the stage for what I will consider a very devastating downward move. I think it'll be quick, it'll be swift, and it'll just cut through all of the support levels as there's what will look like a mass exodus out of the market. Now, again, I continue to feel that that should come on some jarring shock to the market. Now, the basic shock that I thought it could really kick it off happened on Friday. That didn't produce that type of a reaction, nor did it really produce one that was going to push it up so high that it would have made a stronger downside move be pushed out much further. So again, it still may start. But what the count is now showing me is that we have on a sub-minute level now, because we're in this sub-minute wave 5, to complete the minute wave C, and then the minor wave B. And that is now in this last wave is 1, 2, and this is probably only 3, which would then suggest we have a little bit of a fourth wave, which might get back to 4,500 and then rally up again. Right now, we're still being held by that initial zone, which the market did get into on Friday, but basically could not break above. So it got up to 45.10, which just moved it above that zone, which had a top level of 850 to 409, 4509. It got to 10, pulled back, and then just kind of closed back up into those levels again. So we're not getting any indications that the market is ready to turn and to drop down. So I will be looking for a little bit, maybe a little bit more downside to complete a B wave. And then we shall march higher, more than likely. Now, this could all happen again, all in Globex. We still have the opening of the Asian markets in about 45 minutes, and then we have the European markets further on in the evening. So I have resistance still at 45.14, 45.15, which would be 0.70 or 70%, which is where this fifth wave would be equal to 70% of the third wave. And then I have 45.20, and then still above there, we've got the next overlap in a zone at 45.33 to 35. That continues to be a pretty serious target. So we may get this carryover, which may take us into our own start of a session tomorrow morning. In which case, if we're not forming a quick 5 waves down on the hourly chart, which is what I'd be looking for to kick off, number one, the next decline, but also to mark the high. So remember that under Elliott, the guidelines and the rules basically state or give me enough information that if I'm looking for a trend change, that would normally come with an initial 5 waves down as chartable on the hourly chart. So it's not 5 waves down on the 5-minute chart or the 2-minute chart or even the 30-minute chart. It's got to be on the hourly, and that gives us enough evidence that the highs are in for now, and that we're likely going to be breaking down in the start of that, which I am considering a major long-term corrective phase. There'll be plenty of trading. There'll be plenty of trading in both directions. And we'll get into that once it begins, is what to look for and how we'll look to be trading it. But for right now, I think for tomorrow, pullbacks, unless we get up here and complete this wave 5, and in turn the wave C, and in turn the B wave, that I'm going to be continuing to look for this correction to be a little bit on the shallow side. So from here, maybe down to 4503, down to maybe 4500. I'm not looking for too much more than that before we get an additional rally up towards the zone at 4515, 4520 is in the high as 4530 to 35. So we can actually call that whole thing a zone. That would be the zone that I feel could complete this particular sequence and turn the market lower. So that's going to begin at 4514, 15, and it runs all the way up to 35. So we've got about a 20-point zone. Breakthroughs on those levels push our resistance up into this 45, 52, 62, 72, and 85 level. So that would be the next zone. Now, depending on how the rest of these markets and how the rest of the global markets want to really factor in everything that's going on right now, that to me, folks, it just really continues to be that it's really algorithmically controlled. And so now we're just dealing with how the large firms and the larger traders came out of an expiration, which was on Friday. So what got exercised, what didn't get exercised? And so are they too long or are they too short? So that still is coming into play here. And I actually don't feel that we have anything left that's going to support continued buying into these uncharted waters. But as I say very often, stranger things have happened. And that's what we could be confronting now, that the market just continues to push higher because that's how the algorithms are getting triggered. And actually, if people continue to buy puts and it's done by an algorithm, then the hedging position is to buy the underlying. So if we continue to see that, and that continues to push the S&P higher, well, we're going to get up into those levels. I would likely have to start to change the count once we get a little bit too far, but I don't see that yet. Everything still is in alignment and really does fit what our longer term zones that we've had forever and a day, which is right around that 4,500 to 4,509 area. So we've already met all that, but we continue to find these additional levels very acceptable in terms of working an Elliott count under the count that I've got traced out here right now. So I have no reason to go in any other direction, but I am continuing to look for a little bit more upside to finish the whole thing, and then for things to get started onto our downside move. And that's where I'm going to leave it for today. And our next update will be on Monday, the 30th of August.